Good evening. We are talking about risk management and alternative methods of financing. The broadcasting is provided with kind support of Assurance Autolaval Canada.
Slajan, could you please provide us important notes about risk management and alternative methods of financing?
Good evening. In the EPEMDENT of your industry's exposures, we'll systematically and periodically identify those risks specific to your business operations. It goes without saying that this exercise involves an excellent understanding of your industry and more specifically, your business.
Outline is taken from definition glossary regarding risk management and alternative methods of financing.
A process that includes the four functions of planning, organizing, leading, and controlling the activities of an organization in order to minimize the adverse effects, accidental losses on that organization at a reasonable cost.
When our risk identification has been completed, we'll then perform an evaluation to quantify factors such as frequency and severity, while determining your organization's risk tolerance to the consequences of the materialization of such risks.
We will then advise you as to the most efficient means to manage these risks, whether it be by their transfer to the insurance market, to third parties, for example, through contractual conditions, by other alternative risk transfer methods such as the setting up of a captive vehicle or a self-insured program.
By carrying out this whole process, we'll assist you to maintain the optimal cost structure for the management of your risks as well as to control the potential eventuality of catastrophic losses which may compromise the survival of your business.
Although it has been a familiar concept for major companies for decades now, financial, operational, and risk management has particularly concerned corporate management and other external interveners such as bankers, lawyers, accountants and specialized insurance brokers.
As a result of the worldwide financial crisis that started in the fall of 2008, the necessity for increased accountability of officers and putting governance role at the forefront for administrators of public and private companies are on everybody's mind.
I include the probability of extreme and rare events that may nonetheless have significant or catastrophic consequences.
Slajan, could you tell us about 10 priority initiatives to improve your approach towards risk management in a global and volatile environment for financial firms?
Many of these initiatives may apply to all types of companies. Challenge the current culture of firm with risk committees and risk reporting. Develop an objective statement of risk tolerances. Removal, the increased cost of construction and the additional time required to rebuild. Eliminate grouping from the process. Encourage and welcome minority viewpoints. Recommend risk-based financial forecasts that link financial forecast and capital/liquidity adequacy to changes in macroeconomic conditions. Establish risk-adjusted performance measures that appropriately influence behavior and strategies. Integrate risk measures across businesses and risk types for market events. Implement multiple views of risk for increased transparency. Improve governance and control over all financial models. Expand static risk measures to include experience-based simulations. Expand new product governance processes to include the challenges of the early years.